Hello friends, today we'll try to understand some of the past events which are related to international banking, and maybe they do have their effect on global economy. Okay, so in this session we'll try to understand some of the international debt crisis that world has seen in past, which brought in economic turmoil, social unrest and political instability. Now, you see, these are some of the examples which we are going to cover. So they have the ripple effects of the same, bringing in financial emergencies, and it is a situation which is very tough for policymakers and global citizens alike. Okay, so if you need to survive this environment, it is going to take lots of trouble. Let's go in and then see some of these events. The first event which is lined up today is the Latin American debt crisis, which happened in 1980s. Now you see, imagine debt. What is a debt? Debt is a loan, and burden means you take a loan, anticipating that you'll do business and everything will go good. You'll be able to pay them interest on time. But now problem is like once you take loan and you are able to use it for the purpose that you have defined, but later on cash inflows don't come up as per your expectation and plans. So what happens is like you will not be in a position to pay off your debt obligations, and it may take you to bankruptcy. It may take you or your program very close to bankruptcy. So debt crisis is a situation where interest or principal repayment is not happening as per the schedule, as per the plan. Okay, so hence in this situation you see, uh, Latin American means South America. Now you see many of the countries they went into debt restructuring negotiation. Now what is a restructuring here? Debt is a loan. Restructuring means now reorganizing your loan in such a manner where it is somewhat viable. I'll give you a situation. Imagine before COVID, you see, let's say COVID started in 2020. Okay, I remember my case where I bought a car, a brand new car, worth rupee 8 lakhs, and you see, the intent was like I'll be using it. Now you see, the moment I bought it, and in next couple of months we had this problem of COVID, and COVID brought in disaster for everyone. You see, salary cuts, job loss, it affected living standard, and the type of life we had was very, like you see, was very doubtful, confusing. You don't know whether you are going to get money or not. So installments, how will you pay installments when you have a doubt on your income earning? Okay, earnings. So if you don't have a stable earning, how will you pay your debt? How will you pay your installment? So you see, luckily, government took initiative to brought in moratorium for everyone. All the loans where repayment was not happening, you see, banks didn't converted them into NPA, non-performing asset. Rather, bank allowed them some extra period for repayment. Okay, here comes the concept of debt restructuring. Now you see, a party took a loan and is not in a position to repay. If we look into the case, we find that the party is genuine, but due to market change, due to market condition change, or due to some other issue, the company is not in a position to pay us back. So here, intent is all good, and his intent is good as means like bank should support this company, all these companies with good intent to have some way out. So way out is restructuring the loan again in a new fashion. Means let's say the first time loan was for 5 years, let's make it a 15-year loan. Let's bring your EMI down by one third. Okay, just keep it one third of your actual amount. Maybe now with your reduced EMI, you'll be able to pay. Earlier, it was like you see, you got a good job, you bought a car, and now you are paying it to all good. But then you got COVID, and due to let's say 1 lakh rupee per month installment, now you are not in a position to pay because IT companies are into retrenchment mode, and many of the staff members are supposed to work for almost half or one third of the salary. So when it is this situation, you will not be able to afford your installment. So but when we are going to reduce your installment amount also considerably to let's say 25,000 per month, you will be able to pay. So this is what is debt restructuring. It can be in two ways. One, either extending the loan period. Two, means giving a second loan. Any in second situation is like where whatever you have invested in your business is all lost. So I need to give you one more lifeline, one more tranche of loan. So when this second tranche of loan is given, means what is happening is your EMI value may go up, but you have some scope of recovery. You see, this is what happened in Kingfisher Airlines. First installment of loan was gone into bank, and he lost, totally lost out. Then Vijay Mallya had a negotiation with the group of bankers, and they agreed to give him the second installment. Why? Because you see, this party is strong. Market is not supporting you. Hence, you've gone into bankruptcy. Maybe this market movement may change and you'll come out of your economic crisis and maybe you'll do well. And if you do well, you'll be able to pay off all our loans. So, hence, we need to go into debt restructuring. Next is like you see, economic stagnation and hardship. Stagnation means there is no change happening, no job creation, no production opportunity, no business opportunity. Margin is going down, so hence production is being cut down. Unemployment is going up. Per capita income is going down. Consumption will further go down. You see, this is what will usually happen in a economy where you have a crisis, especially debt crisis. So this particular zone, Latin America, had a decade which is lost in this crisis. Decade means 10 years. Progress is lost in just one economic crisis. They saw hyperinflation. Inflation means inflation is price rise. What is hyperinflation? Means one bread which is costing 40 rupee. If it is like, let's say, next morning when you go to your shop and you find this bread which is 40 rupee, the last night is now 450 rupee per bread. Imagine what is this? This is hyperinflation. It will not happen overnight. It will take time. Slowly, steadily, inflation will grow up to such a high level where you cannot do much. If you look into countries like Venezuela, Zimbabwe, you'll understand what is hyperinflation. There you don't have any value for a currency note whose denomination is 10 lakhs. Okay, currency notes are used for burning and preparing food in kitchen. Is because you see currency has lost its value. So it happened with Robert Mugabe of Zimbabwe, where hyperinflation touched like anything, and you see it leads to increasing poverty, and you see people are dying due to starvation, food scarcity. Government is not able to understand how to bring things into order. It's going to be very tough. You see it happened in Latin America. We need to learn from their experience. We need not to go into same situation to understand the problem. Better is like we should learn from their experience. Let's go to the second crisis. Now this is Asian financial crisis of 1997 and 98. India was also, like you see, India comes in Asia, but this crisis is for a region, particular region. When one region is going to be hit, it is going to affect all neighbors nearby, because this is what is called as a ripple effect. If one big building is going to fall, it is going to fall on a nearby building, will have its ripple effect, and this will have back to back, like it will have back to back effect. Now you see, this was mainly East and Southeast Asia where it had an effect. Collapse of Thai baht was there. Thailand currency is Thai baht. So this currency had a big collapse due to this Asian crisis. Okay, so it has another concept called as dominoes effect in the region. So now you see, same thing is happening everywhere. So this is what is repercussion. The crisis then got another point of view. You see excessive borrowing from overseas, over investment, and you see this is all going to bring in, like you see, your market is totally unstable now. Sharp currency devaluation is sure when you are borrowing it heavily from outside. Stock market will not see anything green. Everything will collapse. So you see, this led to recession in these Southeast Asian nations. Okay, India was an exception because you see, this is mainly for Southeast Asian economies. And next emerging economy crisis is Argentina debt crisis, 2001 2002. Now you see, Argentina has a very close encounter with a default. Okay, Argentina default of a massive sovereign debt. What is the sovereign debt? When companies are issuing bonds or debt, and you see international investors are investing in it with a surety that government is, because government is the issuer, so you cannot have a default. You see, the sovereign debt may have a crisis. European debt crisis, later on you'll study this, where again some of the countries in Europe where government issued these bonds and debentures, they failed badly because they are not in a position to repay them on maturity date, will spark economic crisis in that, not only in that country but also in those countries from where investors come in. So the crisis fueled by years of government overspending. Now you see, what are the reasons for these crises? This is usually overspending. Fixed exchange rate is again a a problem in your system where you don't make it market oriented, you are fixing it up, and heavy reliance on foreign borrowings. You see, you are not a surplus economy, you are a deficit economy, and for deficit financing, you are borrowing it from outside. Imagine what is the state of many of your African nations, or you can also take up the example of Sri Lanka, Pakistan, who have taken heavy debts from China and they are unable to pay it back. Now China is after them for recovery, and in order to pay them off, you see, if you cannot pay them in cash, you have to pay them in kind. So many of your seaports have been taken over by China against the loan repayments. Now you see, this is what is very, very dangerous. Weak economies will not be able to sustain the pressure which is generated by big economies like China. Okay, so you put them into debt trap and then you force them to follow some of your practices. Now you see, this is all what is going on. And now you see, right now we are discussing Argentina debt crisis. It happened with Argentina. Imagine any country who is in the neighborhood of United States. Now your point is United States is in North America. All these countries comes in South America. So you see South America, you do have, you see, politically, the philosophies that you follow, they are a bit different from what you have in United States. Hence, you see, these countries didn't got any support from United States. Even though they got some financial assistance, small amount of financial assistance, but you see, these types of situations don't require small assistance. They would require very, very serious efforts in bringing things back into order. Okay, unstable fiscal policies is what brings in. If you look at the picture, can you see the people standing with posters, banners? They are outnumbered. They are outnumbering the police people on duty. So what it indicates, there is civil unrest, unemployment, job cuts. You see, social security measures cut down. Senior citizen people will not be getting their funding. Orphanage homes will not be getting their funding. Why? Because government is not in a position to help. And with this, you see, everything will go down. Now you see, next is European debt crisis, which got triggered after subprime crisis of 2008. The period is 2009 to 12. Now you see, it started with Greece. Greece is the name of the country mentioned here in your presentation. Debt crisis in Greece. You see, Greece is a country which is famous for its tourism. So they are a tourist destination. Now what happens is, like, Greece is a tourist destination. What Greece should do, their ministers, what they did is, like, they borrowed heavily from international market to make Greece a world class tourist destination. Okay, best of the best. So they brought in the infrastructure. So for infrastructure financing, you need funding. So you borrowed it from outside, anticipating that when Greece will get foreign visitors, these tourists in large number, for whom you are making infrastructure, means hotels, roads, means electricity, generation points, and everything that you are putting in place is because you are expecting high number of tourists to come in. Now you see, imagine what happens is, like, what Greece was doing, everything was good, was acceptable, was logical, but another global phenomena triggered nearby brings in a total problem or a mess for Greece. You see, subprime crisis happened in 2008. Due to a crisis, financial crisis or economic crisis, what happens is, like, people will lose their money due to some of your financial system flaws. Okay, so people who have invested in the share market, they lost their money. Almost 7 to 10 of your biggest investment banks in America, they got bankrupt. Imagine, when some big institutions are going down, they'll take good number of investors along with them. So across the globe, there was a state of panic, and it had its ripple effect. One country going into a crisis means every other neighboring country or countries with whom you do have a trade relation, they'll also go down. Now you see, this is the situation when it happened, this subprime crisis in USA in 2008. Now you see, this situation brought in an element of caution across the globe. So tourists who used to go to Greece, they stopped going into Greece. Greece has borrowed it heavily, means now you have to pay back time, you have to pay it off. Tenure is gone, but you are not getting customers, you are not getting clients, you are not getting tourists. From where will you earn revenue? So if you don't have any revenue inflow in place, how are you going to pay your debts? So who are the investors in these debts issued by Greece government? Yeah, the other developed nations like Germany, Britain, United States, China, and other countries who are big in size. Now you see, in European Union, all the big shots, they have invested in different securities issued by other smaller nations. So they have to bear it. So when these countries are going to get a shock, it is going to affect their economies too. So it was a situation where Greece would like to borrow it to have their normal day-to-day life in place, but you see borrowing cost is going up very fast. I'll give you one situation here. We do have a quote in Hindi that is अपनी चादर में ही पैर रखना चाहिए. What it means कि like you should not borrow beyond your eligibility, beyond your capacity of repayment. If you do it, you'll go into bankruptcy. Now you see what Greece did. It is Greece borrowed heavy and was not in a position to repay. Hence, it is having a negative financial outlook. And when you go into negative financial outlook and you need further money, any second tranche, third tranche of loan, you see you don't get lenders at competitive rate. You get lenders at a very exploitative rate. So the rates which were earlier 7 to 8%, they have gone up to 15 to 20%, and then later on it went up to 30, 40, 50% also. Can you imagine if you're trying to borrow, borrowing is available but at a very high rate, which is near to impossible. Okay, and hence you cannot come out of this trap of a debt trap. Next is it has contagion across the Europe. Means again, Greece crisis went to Portugal, Spain, and many other European nations. Now you see, it led to the disaster in European Union. You know, United Kingdom took an exit from European Union because you see European Union would like to stabilize the economy of their weak players. They have to come for the support of these weak nations. Now you see, United Kingdom was not interested to bear pain due to the problem of their neighbors, small neighbors, weak neighbors. Okay, you see, if any country is going to bear it, means what it means ki their civilians have to bear for the loss occurring in foreign countries. So you see, they took an exit from Brexit deal, and now you see, with this, wherever there is a crisis, you need to bring in austerity measures, means and reforms. Economic reforms means you need to cut down your cost, you need to bring in revenue, and for to do this, what is happening is like now your essential, some of your essential areas where funding is must will not be able to fund them. Okay, people are not getting their salaries on time. Electricity which might be free to farmers or some other communities may be withdrawn immediately with immediate effect. Why? Because government don't have funding, and new jobs will not be possible. Contractual jobs will be coming in. Provident fund, pension, all concepts will be taking out, thrown out. No social security measures, no senior citizen coverage plan. So you see, if you do it, you have to pay for it. So you have to cut down your cost, means all unnecessary irrelevant costs have to be cut down to prove it that yes, you are a competent enough to come out of this challenging situation. So you will find civil disrest. है. People will not be comfortable, people will not be ready to accept such changes or reforms which are against them, where they are going to lose some of their daily benefits which otherwise government was giving it to them. Now you see, they people will create trouble. Now let's go into Eurozone crisis. Same thing happened. Sovereign debt crisis went across many of your countries here, Ireland, Spain. If you want to study more on this, check for Too Big to Fail documentary on YouTube. You will get lots of documentaries where you will get visuals to understand the entire crisis, leading to instability of the entire Eurozone. Banking sector turmoil. You see, many banks got run on their banks. Why? Because they were not able to allow their customers withdraw their money. You see why? Because there is lack of trust. Lack of trust means people would not like to keep it in banks. They would like to try to withdraw. You go and stand in queue. Daily limit is 20,000. You are putting a check on it. Why? Because you see, if you allow them to withdraw totally, so it will not be viable for bank to give it to everyone. So hence you put in some checks. You put in some constraints. Like during demonetization, the maximum amount of withdrawal allowed from any bank was 20,000. Now you see, you cannot withdraw more than this. Okay, austerity measures must, you put in some checks on your spendings, on your expenditures, and you try to supplement your revenues. With this, let's go forward into debt restructuring and renegotiation strategies. Now we have already discussed it in past in some of my previous videos that the only way out in such a situation is debt restructuring. Debt restructuring means you need to negotiate with your client. Yani borrower has to tell his or her actual position so that we restructure the plan accordingly. So we may be required to extend the timeline of the loan so as to make it feasible for the borrower to repay, or we need to give them additional loan. So this is what is called as debt restructuring framework, where you see again another set of policy guidelines need to be brought in. And you see, if you need money, from where are you going to give this money? You need to borrow it from international agencies. Okay, so international framework like Paris Club and the IMF, International Monetary Fund, you what they do is like they will try to help these heavily indebted poor countries. HIPC is the acronym used here. So if you do it like this, means what is going to happen is like these economies will have some hope alive, and they may be able to come out of these economic crises. Okay, next is debt equity swap. So countries can also engage in debt equity swap where creditors can be given the ownership stake instead of debt. Okay, so if they take this, maybe after some time when market come back to normal, they can take their exit at a predefined asset profit percentage. The role of international institutions in debt crisis. Now, you see, let me put in some of the agencies like World Bank, IMF, IBRD, Asian Development Bank, BRICS Bank. So they all are like more or less they all are in the same situation. Their role is to help through their intervention. So IMF is supposed to bring in stability for currency. So they'll be giving you foreign currency loans, emergency loans. They'll help you with technical assistance. They'll guide you how to counter such a move. Okay, so once you bring in their reforms in place, things will be cooling down, and because they are there to help you, so you may get your timely monetary support as and when it is required. Next is debt restructuring. So these agencies, if they have lent you some money, so you see they are the agencies who will help you in restructuring your debt, your loan period. So you see, Paris Club facilitates debt restructuring negotiation between creditors and debtors. So you see, both parties need to be brought in onto a table. So Paris Club here in this example, they have given it very clearly that in past, whenever there was financial crisis, lenders means banks and borrowers means parties, corporates who have taken it from banks. They are put up together so that we do have a negotiation and we come to an agreeable solution, mutually agreeable solution where you see banks are able to get their recoveries and customer is able to run the business. Now you see how you do it. It is only possible through debt restructuring. Next is World Bank and various other agencies, apex bodies. They give you policy advice. Now you see country level, fiscal and monetary policies are framed. So those policy needs to have a relook on it, and maybe with their these international agencies support, you may have something better. Multilateral cooperation among international institutions, creditors and debtors is must. If you don't have it, if you don't have collaboration, if you don't have like understanding in place, you see these crises are very tough to manage. Next is lesson learned and preventive measures, monitoring and early warning. The moment you see some negative indicators like GDP going down, unemployment rate going up, investments value instead of coming inside the country, they start moving out. So you see all these indicators will give you an early warning. So accordingly, you need to change your policies so as to bring things in order. Next is regulatory reforms. Regularly, regulators should be able to bring in the latest changes in financial system, and they should be able to ensure their like you see their control over the market by using the latest technology that they have. Now you see AI, machine learning will only enhance regulatory control on the system. Control means they are able to see and predict things well in time before before any warning signals are given. Okay, and international cooperation is what is going to help you. So because these crises are global in nature, so you see you need not to have one of them in your own country, rather is like you learn from the experiences and mistakes of others. So you need to have some common documentation platform. So Bank for International Settlement, Basel Committee on Banking Supervision, what they do, they collect the information from every member nation regarding various like of financial scams or problems that they have faced in past, and they also give you how to deal with it. They give you the toolkit to manage such risk. So let's come to conclusion now. It's all because you see international exposure. These debt crises are so vulnerable. They make your market like a very tough place to deal with. Such financial shocks are very serious lessons in past. But now you see what with the passage of time, people tend to go casual. They don't understand and realize how these situations may affect the entire civilization. So you see, we can only learn from our past mistake and can plan for future upcoming events in a much better way. Means we will be able to deal with them properly. But imagine if something that has not happened ever in past is going to happen up next. Like COVID happened in 2020 was never imagined. So we need to learn from the situation, adapt, and then come out of the stress or this particular situation. So good day, take care, bye.